Good afternoon, ladies and gentlemen. I'm the moderator for this conference. Welcome to the conference call of the New Assurance Company Limited, arranged by Concept Investor Relations to discuss its Q1 FY’25 results. We have with us today Mrs. Girija Subramaniam, CMD, Mr. Titius Francis, Executive Director, Mrs. Smita Srivastava, Executive Director, General Managers, Technical, Mr. Sharath Ramnarayan, Appointed Actuary, and Mr. Vimal Jain, CFO. At this moment, all participant lines are in listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on your telephone keypad. Please note that this conference is being recorded. I would now like to hand over the floor to Mrs. Girija Subramaniam. Thank you, and over to you, ma'am.
Thank you, and good evening to everyone. I am Girija Subramaniam, Chairman and Managing Director of New India Assurance. Joining me on this call are Mr. Titius Francis, ED, Mrs. Smita Srivastava, ED, our General Manager, Technical, Sushma Anupam, Mrs. Lavanya Mundayur, Mrs. Mukta Sharma, and Mrs. Chandra Iyer. We have our CRO, Mr. Ayyappan with us, our appointed actuary, Mr. Sharath Ramnarayan, and also our DGM, Mr. Ruchir Pan. First of all, I would like to thank all the participants who have taken out time for attending this con call. I would also like to express my gratitude to our valued shareholders, analysts, and investors for your continued support and interest in our organization. There has been remarkable growth in the Indian insurance sector over the past few years. However, India still remains under-penetrated, with general insurance penetration around 1.10%. IRDAI, the regulator, and Government of India, along with various insurers, are taking many steps to help increase the insurance cover, bring down the cost of premium, and educate people about the importance of insurance. Furthermore, we are witnessing increasing disposable income, increasing cost of medical expenses, alongside awareness and willingness of the new generation to opt for a health cover. All this has helped increase penetration levels to some extent. We firmly believe that this will only increase substantially with time. As many of you know, New India Assurance was founded by Sir Gaurav Tata in 1990. Our operations now span 25 countries, and we have maintained our position as a market leader since nationalization in 1973. We are proud to be rated AAA by CRISIL and hold an exceptional AAA.in rating by AM Best on the India national scale. Additionally, we are recognized as a domestic systematically important insurer by the IRDAI and our ISO 27001 2013 certified for IT security, placing us amongst the few general insurers in India with such high standards of data security. Also, we are the state insurer for the state of Gujarat and Union Territory of Lakshadweep. This widespread footprint reinforces our dominant position in the domestic market and enhances our ability to serve a broad customer base. The Indian general insurance industry has shown impressive growth. During the quarter ended June 30, 2024, the industry grew 13.33% with a GDP of rupees 72,758 crores as against 64,198 crores for the corresponding quarter of the previous year. Current trends suggest this figure could surpass rupees 3 lakh crores by the end of this financial year. For New India, staying true to our motto, growth with profitability, we have strategically avoided loss-making businesses that could not meet our pricing or terms, resulting in a slightly lower direct premium growth. The company's GWP for the quarter ended 30th June 24 was 11,788 crores. Our net earned premium for the quarter ended 30th June 2024 was rupees 8,503 crores, registering a growth of 7.37% year-on-year. Our market share stands at 14.67% as on 30th June 2024, and we continue to be market leader despite the highly competitive environment. The first quarter of the year was marked by significant catastrophic events, including Cyclone Raymond, which severely affected the West Bengal area, and severe flooding in Assam and Northeast area due to heavy monsoon rains exacerbated by the Cyclone Raymond. As on 30th June 2024, the company has a net worth of rupees 21,343 crores and investment assets standing at rupees 98,770 crores. The company's net worth, including the fair value change account, increased from rupees 44,704 crores in March 24 to rupees 47,703 crores in June 24. The profit after tax stood at rupees 217 crores as against rupees 260 crores in the previous financial year, primarily due to motor third-party portfolio where there has been no price division in the last 3 years. The incurred claims ratio has improved to 95.98% for the period ended 30th June 24 as against 96.19% for the corresponding quarter last year and 97.36% for the year ended 31st March 24. The combined ratio stands at 116.05% as against 115.16% for the corresponding quarter last year and 120.87 for the year ended 31st March 2024. The solvency ratio remains comfortably above the threshold of 1.50 times, and we are currently at 1.83 times. The company has a well-diversified portfolio of products, including the recent launches of surety bonds. In fact, New India is one of the few insurers issuing both big bonds as well as performance bonds, which will support infrastructure growth in the country. We are continuously striving to provide the best customer initiatives and services. Moving forward, our focus remains on digital initiatives, streamlining processes for increased efficiency, and expanding our sales force, particularly through our agency channels. In this direction, we have tied up with super app players like PhonePe and have in place WhatsApp-enabled sales facilities. Looking at the Q1 performance, we have revised our premium targets to better align with our strategic goal of growth with profitability. We aim to achieve an increase in retail insurance premiums and profitable segments while improving our presence in under-penetrated areas and lines of businesses. We plan to undertake targeted marketing campaigns, customer and intermediary engagement initiatives, and the marketing of our products as per individual requirements. As per our benchmarks, by under-penetrated areas, we consider potential in the rural sector, livestock insurance, tier 2 and 3 cities, micro-insurance products for low-income groups, MSME sector, women-centric products targeting millennials and the Gen Z. With our superior digital capability, we plan to utilize our digital platforms, mobile technology, and apps to reach remote areas. A concerted effort for the bancassurance channel is being made with the intention to collaborate with commercial banks, cooperative banks, regional rural banks, non-banking financial institutions. Additionally, we are looking to tap cooperative societies, local organizations, NGOs, and self-help groups to enhance reach and trust with our customers. Apart from the agency and bancassurance lines, our key focus areas shall be speedy claim settlement, improving our turnaround time and ICR, designing new products to meet the requirements of different segments, and digitizing the claims settlement process, including the AI-based claim settlement in select lines of business. We have tied up with super app players like PhonePe, WhatsApp-enabled sales facility, and which is made available across many products. Work is in progress for adding more plug-in facilities to improve customer journey. I want to assure our stakeholders that your company, recognized as a domestic systematically important insurer, is fundamentally strong and strategically well positioned to cater to the insurance needs of the country, offering best solutions to our customers whilst ensuring proper pricing for our products. With that, I now hand over to our CFO, Mr. Vimal Kumar Jain, who will present the performance up to the first quarter of 2024.
Thank you, ma'am. And good evening to everyone. I will give you a brief overview of the financial performance of the recently concluded first quarter of financial year 24-25. The results have been uploaded on our stock exchange and on our website as well. You can also access it.
Loud.
You can also access it as I am presenting a brief overview of the financials of the company for the quarter 1 financial year 24-25. We have the highest market share of 14.67% out of the total gross direct premium of rupees INR 72758 crores written by all the companies. We are leaders in fire, marine, engineering, motor, health, including PA, and aviation. We are a 105-year-old company. We have a presence in 25 countries with 1755 offices in India and having dominant domestic market position. Our solvency is strong at 1.83 times, which has grown from the earlier quarters. We are also rated by AM Best and CRISIL ratings and are also having a ISO 27001 2013 certification. And we are having a diverse product mix with technical competence and a multi-channel distribution. We strive to excel in customer service and technology with a consistent market leadership and growth. Along with the various initiatives, we are also aware of the ESG initiatives which are required to be done, and we are trying to reduce our carbon footprint by sustainable practice, clean energy solutions and digital processes. We are also implementing the various governance practices and aim to be transparent and accountable in all operations. We are involved in various social initiatives like education and health and have using the CSR budget. Our future strategy continues to be increasing the return on equity by increasing in market share, improving our profit margin by leveraging economies of scale driven by growth, rationalization of operating offices, increasing the digital penetration and maintaining a healthy solvency margin, and we are always aiming to leverage technology to drive customer satisfaction, profitability and growth. Our distribution mix, we have brokers 30%, direct business 36%, agency 25%, dealers 8% and bank insurance 1%. Our financial performance, in short, we have completed a gross direct premium income of Indian rupees 10,536 crore in first quarter of 24-25 as against 10,212 crore in last year of first quarter. There is a growth of 3.17%. Our gross written premium is of rupees 11,788 crore as against rupees 11,362 crore, which is giving a growth of 3.74%. The profit after tax is 217 crore against 260 crore. A net worth of Indian rupees 21343 crore as against INR 2025 crore in quarter 1 financial year 23-24. There is a growth of 5.39% in net worth. Net worth including fair value is INR 47703 crore against ₹38,487 crore last year. Our ICR is 95.98% against 96.19% last year. Our combined ratio is at 116.05% against 115.16% last year. Solvency is 1.83 times and our return on equity is 4.09%. Our product mix for fire LOB is at 16%, marine is 2%, motor 22%, health and PA 50% and others at 10%. The movement in technical reserves are adequately provided and as on 30th June 24, it is 51,638 crores in technical reserves. The key ratios, we have incurred claim ratio of 95.98%, commission 8.49% and expenses ratio of 11.58%. We are well within the EOM limits as per the IRDA EOM regulations. Our solvency is 1.83 times and return on equity, as already mentioned, is 4.09%. Net worth is 21,343 crore Net worth including fair value change 47703 crore. General reserves 16,819 crore. Investment and market value is 98,770 crore. And solvency is 1.83 times. We come to the segmental performance. We have negative growth in fire by 7.15% and motor OD at minus 2.29%, whereas positive growth is in motor TP at 9.39%, health including PA at 5.58%, and other business miscellaneous at 16.69%. As already mentioned, the ICR is 95.98%, and if you look at the LOB-wise ICR, fire is at 7.85%, marine at 56.19%, motor OD 114.82%, motor TP at 111.69%, health at 105.95%, and other miscellaneous at 54.95%. These are the brief highlights of the financial performance of the company for the first quarter. Any questions?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Uday Agarwal, SBI Capital Securities. Please go ahead.
Yeah. Good afternoon, sir. Am I audible?
Yes.
Yeah. Thank you for the opportunity. So I had a couple of questions. So first one is that earlier, we had mentioned in our Concall that we are trying to improve our banking partnerships to increase our sales. So sir, has there been progress on that front?
Yes, there has been considerable progress on that front. In fact, in this current year also, the strategy remains with the increased focus on banca, increasing our banca partnerships, and also trying to make products and make them available across banca channels in the way our customers would like to receive them. We are in discussion with several banks, rural, the RRBs, the cooperative banks, as well as the commercial banks, and we are forging new ties with a couple of PSU banks. It will soon come into play in this current year. With this, we are expecting that this year the bank assurance premium will go up considerably, and all our products which are catering to the banca channel are also being promoted, and training is being given to required people at the banks to enable them sell this product. So with all these efforts, we hope to see a lot of traction in the bank assurance channel for us.
Okay. Thank you for the detailed answer. My next question is that could you just give us an indication, about our profitability and the margins going forward? Like how it will pan going ahead? Will we see any improvement on that front?
Yeah. So, as regards profitability, we are profitable at the moment, and we'll continue to be profitable going forward also, because our strategies we have had a very close granular look into our operations across offices. We have realigned our targets. This year, we have got an increased thrust on our retail segment, where we feel there is a more subjective pricing that is possible for us to have, and also where we are able to hold on to customers in a big way. So we will be going very aggressively on the retail channel, and therefore the profitability seems to be more, on a positive note, more achievable. Going forward, we plan to bring down the combined ratio significantly in the medium term, so that we are able to, be competitive in this current environment, as well as have a very win-win situation for the company, along with growth. Yeah.
Okay. And if I could just, squeeze in one more question. So it was like I wanted to know, like, what is the international insurance market panning out, like, as we have presence in 25 countries, and just give us a breakup of the domestic and international gross written premium. Hello?
Ladies and gentlemen, the management line seems to have been disconnected. Please be on the line while we reconnect. Ladies and gentlemen, we have the management line back. So could you please go ahead with the question again?
Yeah, so I was saying that, so what is the international insurance market panning out as we have presence in 25 countries? And the last question is, so could you just give us a breakup of our domestic and international gross written premium, and also which of the above geography has the higher margin?
Yeah, the second part of your question was not clear, Mr. Uday. If you could kindly repeat it.
So I was saying that could you just give us the breakup of the domestic and international gross written premium?
Yeah, so our overall premium consists of 10% foreign and 90% domestic.
Okay. And how is the international insurance market panning out as we have presence in 25 countries?
Yeah, the insurance market internationally is also very competitive. There are, most of our branches and other offices are located in much developed nations, and they have seen a lot of, experience across very many years, and very stably the operations are running. They're able to stand alone on their own without any capital support from us at the moment. And if we want to grow aggressively in those markets, we'll have to infuse a lot more capital. Therefore, the strategy has generally been to remain profitable and relevant, and not with a very aggressive growth margin. In any case, those markets are developed markets where it is very strictly regulated. So being compliant with the regulations and having a very relevant existence there itself is a challenge which New India has very successfully managed for many years across 25 countries.
Okay. Thank you. That's it from my side. Best wishes.
Thank you very much. To ask a question, please press star and 1 now. Participants who wish to ask question may please press star and 1 at this time. The next question is from the line of Aditi Joshi from JP Morgan. Please go ahead, ma'am.
Yeah, thank you for taking my questions. I have a couple of questions. The first is just want to follow up on the ma'am's comment that that you are trying to avoid this loss-making business lines. So can you please get some more details, as in which specific business lines or product segment that is? Second is, can you please share your ROE target if you have for this year and the next year? And the third question is on the health insurance underwriting. In the comments, in the presentation comments, you have mentioned that some higher loss ratios were seen in the government health scheme. So I'm just trying to understand, is it just one-off, or how do we see the loss ratios panning out in the government scheme segment, and how should we overall think about the health insurance loss ratios? Because you have said that the retail and the group side is sort of improving in the underwriting. So yeah, those are from me.
Yeah, to answer your question number 1, which was on which lines of business we are avoiding, which are loss making. So the comment that we made was we're not avoiding any line of business. We are present across all lines of business. We'll continue to be present. The only thing is our strategies have changed within the line of business so that we focus within the segment on better business, on wherever we've had bleeding accounts, like in group mediclaim business, where we had a lot of heavy ICR because of certain groups not performing well. We have hiked up the price and we have lost businesses because of that. So there is, wherever we have lost business on account of increase in price so that it becomes viable for us, we have lost the business and therefore the degrowth in those lines. Otherwise, we are very aggressive on the retail side across all lines of business where we intend to grow with much more aggression in the coming quarters. Now, the second question was on ROE targets, which our Executive Director, Mr. Titus, will answer.
Yeah, good evening once again, and thank you for joining us. So, as regarding the question regarding ROE, so I would like to just inform you that we are committed to have double-digit ROE in the short term. So, anything above 10 is we are targeting to be above 10 in the short term or the medium term range. So, this is our target because we have a good amount of net worth. So, we require a good amount of profit to have that ROE. So this is what we target in the short term. So probably in a year or 1 to 3 years, so we have targeted that we will be going about it.
So on the third question regarding health loss ratios, we have our GM, Mrs. Sushma Anupam, who will answer that question.
Good evening and thank you for the question. Actually, related to the government loss ratio, I will first answer that usually in any policy, the claims would be panning out in different times of the year. And they are more or less cyclical and seasonal. So what happens is that the entire picture, the loss ratios will stabilize by end of the year. So if we look at it at any one point of time, it could vary from time to time, but over a period of time, it stabilizes. So we see stability that will come by end of the year in the government loss ratios. And as regards the other balance health portfolio, as CMD ma'am has already mentioned that we are forging ahead into the retail segments which are profitable, and we are strategizing to have more and more business in that. At the same time, we are concentrating on the group businesses which have been profitable, and some of them which have not been profitable, we have tried attempting the price correction. Wherever the customers have supported us in this initiative, we have gone ahead with them. Wherever it has not been mutually acceptable, there we have let go of some accounts. And definitely the effort, as we have also recruited a large number of doctors. So we are making all efforts to make the portfolio sustainable. At the same time, we are actually having some constraints in the form of the medical inflation that is coming year on year. So as much as the efforts are being made, we are even having to face the medical inflation and the newer additions in the treatments and the modern treatment cost which is going up. That actually is on the other hand making all the calculations and estimations a bit stormy. So nevertheless, it is a journey which we have begun, and I think that with the strategy we are very hopeful of bringing down our loss ratios in the health segment as well, in the group segment, I mean to say. Thank you.
Yes.
Thank you. Participant who wish to ask question may please press star and 1 at this time. The next question is from the line of Aditi Joshi, JP Morgan. Please go ahead.
Yeah, sorry. Thank you for taking the question again. I could not catch your comments on the last question. Actually, there was some issue with the line. So, just briefly on the health insurance segment again, if you can. Sorry.
Okay, sure. So actually, as I was mentioning that as far as the government loss ratio, I would address that query first. Actually, the policy which is there is for a year, and in usually in all such policies, as the awareness increases and as we encounter different seasons, the claims do change in the numbers, and the exposure that is there changes in the time of the year that we talk about. So usually all such policies, they stabilize by end of the year. So even in this policy, currently, though we see a spike in the loss ratio, we are very hopeful that by end of the policy year, we will be able to have a repeat performance of the previous years, and the loss ratio would stabilize there also, because the seasonal impact will be neutralized by then. And coming to the other part, I mentioned that in the retail segments, as our CMD ma'am has already mentioned, that we are really going strong and we are making all efforts to increase our portfolio there, and we are coming out with new products and simplifying the processes and making it more customer friendly and easier for the customers to onboard various products that are being offered. And we see a good traction, and we are hopeful that the portfolio is going strong. And as far as the corporate group policies are concerned, we have attempted a lot of price correction, and we have a very huge book, as it is well known by all, of very large portfolio clients. So there we have all along attempted at a price correction, and wherever we had challenges and where it was not mutually acceptable, we have let go such accounts, and we have also recruited a large number of doctors. So we are working very closely on monitoring of the claims and other processes that are there. But at the same time, another challenge or a problem that we encounter all along is the high medical inflation. So initially it was felt that after COVID, the medical inflation would come down, but it has not sadly come down. And then to add to it, we also have a lot of modern treatments coming up, which are actually quite costly, and the estimations what are done usually on account of these sometimes do go a bit stormy because of various things in the short duration. But we are hopeful that even in the corporate health segment, as the year progresses, we will make better improvement in the loss ratios. Thank you.
Sure, got it. Thank you so much.
Thank you very much. Participants who wish to ask questions may please press star and 1 at this time. To ask a question, please press star and 1 now. The next question is from the line of Aditi Joshi, JP Morgan again. Please go ahead, ma'am.
Yeah, thank you so much for taking questions again. Just a couple of follow-ups, actually. So when we say that in the retail segment, you mentioned that you're going aggressive. So what does, and you're trying to grow aggressively, so what does aggressively mean here? Like you're aggressive on pricing means that cutting the prices, or aggressive on gaining the market share and combining with hike in the pricing? So yeah, that was my question.
Thank you, Aditi. Actually, it's a very good question. I really liked getting this opportunity to clarify that actually when we talk of aggressiveness, it is not the price alone. Price definitely has to be one of the important features because we are working in a competitive market where we can't price the product in isolation. But when we talk of aggression here, we were trying to make out a significant strategy where we are identifying the different sections of the population and coming out with different products that would attract different sections of the population. We are coming out with features that would be more appreciated by the customers, where the customers can easily onboard and buy the policies. So all these features, the ease of buying insurance and increasing the market penetration, that is what we were trying to mean when we say the aggressiveness. Thank you.
Okay. And I think in the past couple of quarters, we have seen some pricing hike in both retail and the corporate segment. So is this trend continuing in both the segments? Is it what's going on?
Yeah, so actually, if you see in our flagship products particularly, we had come out with the price revision after 6 years. So, because we could not come out with the price revision due to the pandemic being in force, and after the pandemic we came up with the price revision. Thereafter, we also made some changes in the pricing strategy because there was a lot of feedback around it that when the pricing is as per the age bands, then people who are having double impact, as much as the price has gone up, even the age has gone up. So both counts, they have to pay a higher premium. So to take care of that, as we had in the previous meetings, we had informed, and which we have implemented also, that we came out with age-wise pricing, and also to take care of the zonal differences. Certain sections, certain areas of the country face higher medical inflation, and the traction is more towards the usage in terms of the footfall in the hospitals and all. So taking care of that, the pricing was modified. So that was the price rise which we had in those products. And then now, after the master circular which has come, and there are some 5-6 changes which are introduced and mandated by the regulator, for which we have to be compliant by 30th of September 24. To take care of that, in some of our products which we had not touched the pricing for maybe over 5 years or so, and which products are actually not very, I would put it this way, that they form part of almost some 15% of our premium coverage kind of. In those policies, we have come out with increase recently, which has been received well, I think, and which will be effective only in the later part of the year. Thank you.
Okay, sure. So when we talk about flagship products, it's is it on the retail side? And
yeah, so actually, in retail, we have to come out with a price revision because it is on a book basis. It has to be applicable to all simultaneously. And there are certain norms to be followed that we have to give notice to the customers before we make any price revisions. Whereas on the other hand, for group policies, it is always on each renewal we keep doing the price correction, and for whatever features are getting added, they are factored, and then accordingly the pricing is done. So there we don't come out with a pricing strategy or a particular percentage or some price, because each policy has its own experience, and it is an experience-based pricing.
Okay, sure, got it. And just one last question. Can you share the reason for a weaker investment income on year-on-year basis in this quarter, in last quarter?
Yes, ma'am. Just you can you again ask the question?
Yeah. Can you share in the first quarter the investment income was slightly on the weaker side. So what are the reasons for that, please?
Actually, in the first quarter, our that profit on sale, we have not sold much equity. due to that dividend we received in the first quarter, or in the after first quarter also. So we sold less equity in the first quarter, and due to that we received the less profit on sale of equity realized.
Okay, got it. Thank you so much. Thank you.
Thank you very much. The next question is from the line of Jayesh from Harshad Gandhi. Please go ahead, sir.
Hi, sir. Actually, I've joined a little late. I don't know whether you have answered this question or not. What are we doing to bring down our combined ratio? That is for my first question. And the second question, in say last 3 years, on an overall basis, how much increase in prices have we done across all our products, whether it be health or whether it be fire? What are we anticipate in 2 years, the price increase?
So as far as the combined ratio goes, it's a multi-pronged approach that we are, trying out. One is that we are changing our strategy towards our business. We are going more retail now because across the industry, if you examine the performance of products across various insurers, retail business has done better across all lines of business most of the time. So therefore, we are also going retail, and we are, putting our distribution strategy in place to match with our aspirations on this front. And we are activating most of our bancassurance channels, getting into more tie-ups, having more engagement with our intermediaries, with our agents in order to ensure that the products that we have customized for our retail segment are sold and they reach the masses. Moreover, we have put internal targets of, getting some chunk of premium from hitherto uninsured areas. So getting some new business which has never been insured before, which is one of the targets of our company this year. And this will go a long way in ensuring that the combined ratio comes down significantly. We are, reviewing our pricing on corporate businesses wherever there is they have bled or in tune with the current market trends in that line of business. We are improving that price in those accounts. And all of this collectively will surely bring down the combined ratio, we believe. We are improvising heavily on our systems and processes. We are investing a lot into skill set development of our employees in order to be able to address issues, quickly, bring around faster turnaround times in terms of claim service, see that less number of claims, are delayed, and we give better value for the customer. And all of this, because the risk selection itself, I think there has been a huge difference in the way the risk selection strategy has been, because we have inducted a lot of risk engineers, automobile engineers, we have inducted doctors into our workforce, and they are working tirelessly and gaining experience each day as we go. And we are also, training them into the peculiarities of this line or each of these lines of business. They're able to give better service and do a better job of the risk assessment at the time of selection itself. This also, we believe, will bring a big traction to the results at the end of the year. And in the medium term, we expect to bring down the combined ratio significantly.
That's great to hear. And madam, what about the price rises that we have taken in, say, last 3 years on an overall, all the businesses?
Yeah, on this I would like our appointed actuary, Mr. Sharad, to explain.
Am I audible?
Yeah.
So price rises, we cannot give a figure as to across the board how much price increase was taken, because it depends on a lot of factors, including what segment of the market we are talking about. So coming to specifics, in retail health, there has been a price increase of close to 25%, which we rolled out last year. And this year also, because of some zoning related changes, there has been price increase in some zones which has been rolled out. Again, for the regulatory purpose, there is a 10% hike which is rolled out across various different retail health products. On group health, it is pricing is done on a case-to-case basis, depending on how the behavior of the group was. And as Mrs. Sushma mentioned earlier, the pricing has been made much more prudent, and wherever the price we want is not available, we are happy to walk away. Coming to motor, because there has been no price increase on the motor third-party front, we have rolled out some price increases on the motor own damage front in order to cushion the impact. So that has been done, and that has been done across segments. Particularly on the commercial vehicle side, the price increase has been on the higher side on the own damage front. Coming to property, because of de-tariffing, there has been some pricing pressure, but here the focus is more on risk selection, so that for the price which is available in the market, we are choosing the right risk. So like that, for every product line, the strategy has been different depending on the market conditions. So across the board, whether price has increased, decreased, that is, I don't think we can really be able to pinpoint a figure to it.
I get it, sir. Thank you, and good luck for future.
Thank you very much. Ladies and gentlemen, that was the last question. I now hand the conference over to Mrs. Girija Subramaniam, CMD, New India Assurance Limited, for closing comments.
Yeah, I would like to, take this opportunity to thank all our investors, our business partners, our employees, and everybody connected to New India one way or the other. Mainly our customers for constantly reposing trust in this institution, which proves our existence for 106 years, and we will be there strong, leading from the front across many more years to come. And we would put every effort that is there, the entire management team and the workforce, to ensure that we deliver on the promises that we have given to our customers at all times. Thank you so much for this opportunity.
Thank you very much. On behalf of Concept Investor Relations, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.